Hello everyone, and welcome back to Explain the Charts. Today, May 22nd, 2025, we're diving into the SPY, the S&P 500 ETF, and examining both the latest news and technical charts. Recent headlines paint a concerning picture, with the Dow shedding 800 points amid rising Treasury yields and deficit concerns. Let's correlate these events to what we see on the charts and formulate some trading strategies. First, let's address the elephant in the room, the 800-point drop in the Dow. News outlets are attributing this to bond market jitters over a new tax bill and rising Treasury yields. This creates a risk-off environment, prompting investors to dump equities. Zooming in on the daily chart, we can see a significant red candle forming, reflecting this sell-off. The candle's large body indicates strong selling pressure. We need to identify key support levels that might halt this downward momentum. Looking back, we see potential support around the 582 level, which has proven resilient in the past. Now, let's switch to the 1-hour chart to gain a more granular view. Here, we can see the intensity of the selling pressure throughout the day. Notice the steep decline and increased volume, confirming the bearish sentiment. Looking at the most recent candles on the 1-hour chart, we see some signs of consolidation near the 582 support level. This might suggest a temporary pause in the selling pressure, but it's too early to call a reversal. Let's drill down further into a 15-minute chart of the last few hours to pinpoint potential entry and exit points. On the 15-minute chart, we observe a battle between buyers and sellers near the 582 support. The candles are relatively small and indecisive, reflecting this uncertainty. Traders should watch for a break below this level for potential short positions, or a strong bounce for long opportunities. However, with the underlying news being bearish, it might be worth focusing more on short opportunities. In the short term, if the SPY breaks below 582, look for a move towards the next support level, potentially around 575. A strong bounce from 582 could signal a short-term rally towards 590, but that's less likely given the overall macro headwinds. Longer term, keep an eye on Treasury yields and the progress of the tax bill. Continued pressure on yields could lead to further downside for the S&P 500. So, to recap, key price levels to watch are 582 as immediate support, 575 as secondary support, and 590 as potential resistance in a short-term bounce. Unbiased prediction. There's a 65% chance we'll see further downside, breaking 582 if Treasury yields continue to climb, but a 35% chance of consolidating around the 582 level if yields stabilize. Important: keep an eye on upcoming economic data releases and any news regarding the tax bill, as these will be important catalysts. That wraps up our analysis for today. Don't forget to like and subscribe to Explain the Charts for more in-depth market breakdowns. Until next time, happy trading!